You can't wait for the market to tell you when to act. By the time it's obvious, it's already too late. I know, we keep talking about alt season like it's around the corner, but it's not here yet. Let's not get excited just because the market had a little mini pump. To be honest, we're still very, very far from where we were earlier in the year. And if you ask me, altcoin season may not show up as soon as everyone hoped. But do you know what separates winners from the rest? Patience and preparation. The plan is simple. Prepare in advance, study the cycles, build a strategy, and most importantly, stick to it. That's exactly what I'm doing in this video. I'm revealing the plan I'm going to be following in order to navigate every phase of alt season. From the first signs that Ethereum is waking up to the final stages of peak hype when everyone's scrambling to get in. So let's start by understanding how alt season actually happens. It's not just random, even though it can feel like it to people who aren't looking hard enough. There's a clear rotation flow that every cycle tends to follow. First, Bitcoin rallies. That's where capital starts flowing back into crypto. This is usually in line with a spike in global liquidity as well. After that, Ethereum picks up steam. Then large caps like Sol or BNB start to move. And finally, money trickles down into the smaller plays, whether that's gaming, AI, DeFi, or something else. But remember that each of these stages could potentially be months apart depending on how the market is moving. And as of right now, ETH has been absolutely struggling compared to Bitcoin's performance. If you look, you'll see that ETH is still at the same price it was during the start of the 2021 bull run, while Bitcoin's way past the previous peak of $66,000. So it looks like we still have some time to prep, but you need to keep your eyes open for some major signs, like if BlackRock were to start scooping up large amounts of ETH for the ETFs, for example. The next thing I want you to look at is this chart called Total 3. It measures the market cap of all crypto assets except for Bitcoin and Ethereum, so basically the whole altcoin market. For both the 2017 and 2021 cycles, you'll notice that Total 3 saw its major pumps directly after Ethereum's pumps. This means you can track the performance of ETH and use it to gauge how the altcoin market may perform in the near future. And another important thing to watch is Bitcoin dominance. This basically shows what percentage of the total crypto market cap is held in Bitcoin. Right now, it's sitting around 65%, which shows that capital is still a bit cautious. When dominance drops, that's usually a sign that alt season is starting, since it shows that altcoins are starting to soak up a bigger piece of the market. Keep an eye out for when it drops to the 55% to 60% range. While Bitcoin dominance is this high, I tend to stick to trading Bitcoin and Ethereum. And for those of you who like to trade more actively, I want to go over the trading strategy I'm using in the current market setup. Remember, as always, this is not financial advice and you should never risk more than you're willing to lose. So I've been experimenting with futures trading over on the WEEX exchange, and I like this exchange because of the insanely low fees compared to others. So here's my strategy. It's pretty simple. If I look at the 200-day simple moving average and notice Bitcoin or Ethereum approaching a key support level, I'll place a long to try and catch the short-term bounce to the upside. On the other hand, if the price is approaching a resistance level, I'll place a short to try and catch a move to the downside. Now, if I'm ever considering placing a leveraged long or short, I'm not just looking at the moving averages. I also check the RSI or Relative Strength Index. Here's how it works. If Bitcoin's RSI is sitting around 30 to 40, it means the asset is oversold. If it's around 60 to 70, it means it's overbought. So if the price is approaching support levels and the RSI is ticking up from the oversold zone, that gives me more confidence in placing a long. Whereas for shorts, if we're hitting resistance and the RSI looks overbought, that's a strong signal for me to stay cautious or take advantage of a short-term reversal. And if this is all new to you, then don't worry. WEEX has a whole learning section that walks you through the basics of how futures work, which is super helpful. And remember, this isn't financial advice. You should only trade with what you're comfortable with losing. Now, once we see Bitcoin dominance drop into the high 50s, things start to change. That's when I'll start ramping up my medium to large cap accumulation. I'll be looking at the leading players in the most hype narratives. For example, in the AI sector, I'd be eyeing things like Bitunix, Tau, Near, Render, and others. For layer 1 projects, maybe I'm looking into Solana, BNB, or AVAX, and even some of the larger meme coins like Pepe. As dominance gets into the mid to low 50% range, we should see more money trickle down even more. Coins within those layer 1 ecosystems will start taking off, and I'd be looking to the top projects within each of those ecosystems. For example, Sol's largest exchanges like Jupiter or Radium, AVAX's largest meme coins like COQ, or top DeFi projects like Ondo. Of course, those are just a few examples. There are thousands of potential plays. And don't worry, by that point, I'll be dropping video after video on all of the ones I'm watching, sharing my top picks, and even breaking down my portfolio. If you want that alpha before it hits YouTube, I've got you covered. You already know how important it is to stay ahead of crypto. Every minute counts when you're basically competing with thousands of other traders. That's why I think you'd benefit from something like checking at the FireHustle VIP Discord. I share all my research, alpha, portfolio updates, and exclusive VC deals, alerts on what I'm buying and selling, early access to videos, and more. If you're interested, give it a shot at wap.com/FireHustle. I'd love to see you there. But as Bitcoin dominance keeps dropping, we push deeper into the cycle, past the belief and accumulation phase, into the peak euphoria phase, and eventually the panic phase on the way down. Once dominance drops below 50%, you'll start seeing new coins popping up every single week. Solana trenches getting flooded with random low cap coins, rug pulls going viral, and some straight up garbage coins hitting millions in market cap. You can feel the greed. That's when things get risky. So I always make sure I have an exit strategy in place by this point. The first signal I watch closely is when Bitcoin dominance drops below 45%. That's one of the biggest red flags. It means altcoins are going crazy, retail is maxed out, and greed is everywhere. This kind of setup has marked the top of every major cycle I've been through. I also watch the M2 money supply like a hawk. When it's rising, crypto rallies. But when M2 flattens out, that's my cue that things are slowing down. And once the liquidity dries up, so do the market caps of the projects in my portfolio. Then there's the more subtle signs I've learned to recognize, like when crypto apps start topping the app store, or when people who've never talked to me about crypto suddenly ask how to buy some random 15k market cap token on Coinbase. That's when I know things are overheated. And my biggest personal signal, when I catch myself taking screenshots of my portfolio gains, which sounds a little silly, but that's usually when I remind myself to stay grounded and lock in some profits. I know I'm not just clicking sell all at once. I've stopped trying to time the exact top. It's just not realistic. Instead, I stick to a strategy. One of my go-to moves is DCing out, which is selling pieces of my position over time based on target percentages. For example, if I bought a coin at $2, I'll plan to sell 30% at $5, another 30% at $7, and the rest at $10. I use WEEX to automate this with limit orders so I don't have to stay glued to my screen during a 3 a.m. pump. And when it comes to riskier plays like low cap meme coins, I use the house money strategy. If I hit a 2x, I pull up my initial investment and let the rest ride. That keeps my capital safe and gives me the flexibility to rotate into new plays faster. This is just what's worked for me after going through multiple cycles. I'd rather play it smart, stick to my plan, and stay grounded instead of getting caught in the hype and FOMO. And that's my full strategy. It's all about using real signals and making calculated moves, not emotional ones. Sure, no cycle plays out exactly like the last, and dominant zones might shift, but having a strategy will always be going in blind. And that's all, folks. Let me know in the comments if you like this strategy or what changes you'd make. I'm always curious to hear different approaches. And don't forget to hit that like button, subscribe, and turn on post notifications to stay in the loop with me. And if you want early access to these plays, then check out the VIP Discord using the link in the description. As always, none of this is financial advice. Do your own research and only invest what you're willing to lose. Thanks for watching, and I'll see you in the next one.